Hey guys, what's up? My name is Tato Polelo. I am an ICT trader. I've been doing this for the past 5 years, and I thought, why not continue this lesson here, CRT candle range theory. We initially started a lesson on that because Mr. Pule had asked, "What is this thing? What candle? What do I look at after marking the CRT high and CRT low? What then? What do I do from then?" Okay, this is what we're going to do. I went on and studied it. I even traded the concept, and it's not bad. Just that you, like I said before, you're gonna have to be waiting a lot of times. You're gonna have to be waiting a lot of scenarios, and but according to my um, experience after back testing and learning it and trading it, it only works best if at all your higher time frame confluences are or points of interest are hit. Um, right now, I'm looking at the 4-hour time frame, and today I'm not going to do any slideshow or slide presentation or anything like that. So it's just straight up charts. So like I was saying, I'm looking at the 4-hour time frame. That was yesterday. I was looking at the 6 a.m. Thursday 20th candle. I then marked my, let me just do the thing. Let me put the mark down and let's do the analysis. All right, what I did first, I was looking at this candle. Why did I choose this long 6 a.m. candle? It's because this candle got into a daily buy side imbalance, sell side insufficiency, or in simple terms, a fair value gap. Let's go to the daily time frame. This fair value gap, this huge fair value gap, that is what I was looking at first. So after this happens, I went down to the 4-hour time frame. Now this is our daily fair value gap still. This is still our daily fair value gap. And what I did, I marked the high of this candle, which is the CRH, or let me say CRTH, candle range theory high. No, let me just call it candle range high. You can say candle theory range. Nah, that's not it. So this is the candle range high, because we're using the range of this candle, right? And then I went out and marked the candle range low, which is this one. Let me use my replay thing. There we go. Immediately when this candle touched the fair value gap, the fair value gap, all I had to do now was wait. What was I waiting for? I was waiting to see the next candle close, the next candle's body take out this low and close above this low. I want the body of the candle to close above the candle range low, right? So just to recap what I said, first you identify your candle range, or the candle range that hits a high time frame point of interest. It can be an order block, it can be your fair value gap, it can be, I don't know, a volume imbalance, anything really that you use to see what a price has changed the state of delivery. So yes, after price hit this fair value gap, the daily fair value gap, I waited to see where the next candle is going to open and close. I wanted to see the candle take the low, the next candle number 2, to take the low of the candle range low. I wanted to see that happen. And the price and the candle body closed above it, and that was point number 2 ticked. And then I would like now to go into a smaller time frame, since we are now waiting for the next candle to open. I want to now start looking for what? For buy entries, and then any entry that I get when buying, I'm going to put my take profit up there and my stop loss somewhere there. We'll see where we put it. So I go from the 4-hour time frame, I go now to the 1-hour time frame. Now here is the candle range low and the candle range high. And then what happens here is price trades up, and then it fails to close beneath the fair value, the daily fair value gaps high. So the next candle opens, the next 1-hour candle opens and tries to go down, touches the fair value gap, the daily fair value gaps high, and rallies up. So this shows me there's a lot of support right here. So price is failing to close below here. And then is there anything that it's prompting me to try to buy? No, nothing yet. So let me play the next candle and go to a lower time frame. Nothing is exciting me yet. Okay, let me select the bar. So right here, price, I'd like to mark anything really that I see. So if at all I see something and I mark it on my charts and it's going to be significant in my trading, I'm going to mark it. If you see something that you don't understand, note it down and then comment with it, or send me what you saw, say no, or if you didn't understand, so I can go through it. So this is a volume imbalance, the gap right here. Price came down, and then this long wick, I like to measure the consequent encroachment of long wicks. Price usually reacts to the midpoint of a wick. It doesn't have to be long really, as long as there's a wick and then you measure the 50% of it, or the CE, this part, that's the CE of this long wick. Price touched that long wick and rallied up. I want to see that. That's showing me what, okay, price still wants to go up there, and that's fine. I didn't get anything during the New York session, but let me just go a little bit further. I can see something. There's nothing really. This could have been a loss for me, because if a trade, this wick is too low, so I was gonna probably risk a lot. So yeah, a formation of a low, this swing high being formed, a break of structure, or a market structure shift with displacement. Of course, I would have waited for price to get into the fair value gap or touch the order block, this down close candle, and then rally up. My stop loss would probably been at the low or the close of the body, and then I would have been taken out. But if at all you put a trade right here and then your stop loss would be down there, that would be the first trade to enter, and your take profit at the high of the candle range. And then, okay, a low was formed, and what do we have? A swing high right here, this swing, and then there's displacement, a market structure shift with displacement, of formation of a fair value gap. My entry would be at the volume imbalance. One thing you need to know about trading is some things you're going to see and learn only through experiencing it. So by gaining experience to the charts, you're going to see the market reacting very well to volume imbalances. This is a volume imbalance. This is a volume imbalance. Price, what did price do? yeah, it got into the fair value gap. You would have ukwabo jile saying that to be safe, I would have taken the trade and then at the fair value gap right here, and then put my stop loss at the bottom here. And of course, that's what I did. I took this trade at 11:35. I make only exceptions for the 11:35 trade because of this candle range theory thing. My trade was from here until here. That's the stop loss that I put, and then my take profit way up there, the candle range high. Don't worry, I have another entry that I put in during the New York PM session. I usually start looking at the New York PM for an entry during the New York PM session from 13:30 100 hours. That's New York time, between 13:30 and 16:30 New York time. So yes, this is a volume imbalance. I used it for my entry, and that was my take profit. And then price went on. So just to make sure you guys understood me well, I waited for price to react to either to enter into this fair value gap, and then right here I didn't enter it because this, for me, it wasn't really a clear market structure shift on the platform that I was using, because trading data is not always the same. But when you look at trading view, this is a clear market structure shift. I was using MetaTrader because that's what I use to trade. And then after taking this is price taking out liquidity. I then measured the 50% of this long wick. There was support that pushed price up, and for me, this is my market structure shift with displacement and price trading back down to 50%. Let me show you the 50% level. You use that Fib 52 that I told you about. You measure this dealing range. What did price do? Of course, then I wouldn't have traded this fair value gap because it's in premium. I wouldn't have bought it because you don't buy premium. You could buy this and still be a winner still, but for me, there was too much. There was a bit of a stretch. That's why also I had to mark this volume imbalance and use it instead. And immediately as price hit it, I used it as a point of entry. And then, like I said, I used the high of the candle range as my take profit. And then during the New York PM session, I got another entry. Let's fast forward this. This also could have been another entry. This is a fair value gap, a market structure shift right here, and then price came back, but it's a gamble for me because price didn't even get to 50% of this fair value gap. Because also we want a formation of a swing high. It's price just going up. So if at all you wanted to use this as your entry, you would have waited for price to really form a swing high and then come down to it. That is where I entered my second entry using this order block. I used this order block as my entry, and I used the previous entry point as my stop loss. Why? Because it's an intermediate term low. I'll teach you about intermediate term lows and highs in the future, because this is part of advanced market structure. And then I used my high, the candle range high, as my take profit. And then I just left the markets, Woke up today, finding out market opushite, and this is how it went on. And for today, I make sure to mark my New York had the Asian session and the London session, because I'm gonna use them for today's trading day. I'm showing you the previous trades that I took, so today's another day. That's the Asian session right there, and then this is the London session. I'm going to use this low as my take profit today, depending at all if the market will do what I want it to do for me to actually take a trade. So still, this is the candle range high. This is our candle range, and boom, our take profit is hit. So yeah, this really was a really great trading day. And yeah, the candle range theory really works. But like I said, there's a lot of waiting for it. I would only use it if at all price got into a higher time frame point of interest, and also only if I'm expecting price to change state of delivery. You can see that this was completely selling until this point, and then that's when we started using our candle range theory, and then boom, we got our take profit right here. And the one thing that made me confident that the price is going to get to that high is because previously price had left the Asian range high, or the Asian session high, and according to my studies, my back testing, the market delivers in this manner. This is the London session, and this is the Asian session, and just look at how the markets took the low of the session of the Asian session, right, and then created the low of the London session and rallied up immediately before this long sell. Price took the high of the London session, right? You can see it right here. The high of the London session, right here. Immediately after taking this high, it pushed down. It went on a really fast decline. And of course, I sold this, but I was looking to take my trades at the low of the London session, which was fine. And while it did this, I also was looking to buy. And yeah, you could say I was tossing around the markets, and that's the fun of knowing how to do this trading thing now, confidently and with a plan. So key takeaways: mark your London session and the Asian sessions, the highs and the lows of the Asian sessions, and then when the market hits your high time frame point of interest, start looking for a range that you could use to trade. As much as I started marking out my dealing range, the candle range high and low, and then waited for price to take the candle range low, and then from there, that's when I start looking for an entry high, knowing that I want to go and take out my candle range high. There were a lot of things that made me want to take a buy from the low. Look at my 1 hour volume imbalance. I marked it out. Price went and touched it exactly and turned right at it after taking the Asian high, after taking the candle range high. So really, this was easy money, and this is how you could incorporate it to your trading plan. You don't have to always be using it, because even on this trade, there was a lot of confluences. Initially, price was on a 1 hour fair value gap. This is the high of the fair value gap that I marked, and then immediately after taking the high of the London session, price was entering into another fair value gap right here. Right here. After taking that high of the London session, let me change the color. After taking the high of the London session, price got into a fair value gap that has an order block. These three consecutive candles, these up close consecutive candles, these are order blocks. And if you want to see what this is going to be a high probability trade, this fair value gap should have an order block in it. And this is market structure shift with displacement. Price came back and touched that fair value gap and then rallied down. This was my first entry. My second entry was on this other fair value gap right here. My entry, the first entry was this fair value gap, and then my stop loss was at the top there. Second entry, stop loss at the top there, and my take profit was right here, the low of the London session. Similarly, on this trading day that I took a long trading position, long I mean buying and also long by taking almost the whole day really to get to my take profit. This is the Asian session. I marked the high and the low of the Asian session. Price took the low of the Asian session. Guess what? It traded after taking the low of the Asian session. It went up, took the high, and now I'm expecting for price to rally down, take the low of the London session, and then we carry on to come and now take these relative equal highs that you see up here. So this is what we look for price, what we trade. Even here, that's the same story. The London session low taken out. What does price do? It gets into a fair value gap, you buy, and then your take profit could possibly be at the high of the London session or the high of the Asian session. But like I said, I use volume imbalances to take my profits. Right here, there was a profit. You see how now these trades are similar. Look at this: the Asian session high, London session high. They were taken out. So one was not taken out. After the low was taken out, you go up and take that high, and that high has a volume imbalance on top of it, a fair value gap on top of it. So those are the things that draw price. So these are the stories that you should be telling yourself when preparing or making your story to sell or to buy. So it's almost 9:30. So let me end this lesson right here and prepare for my trading session. I hope you found this lesson insightful, and I hope it helps you with your trading journey. And yeah, let me just go back to this trading thing. I'll upload this probably this lesson immediately after my trading session today.